Hello and welcome to MasterChartsTrading.com market recap for Friday, November 13th, 2015. This week the breakdown in SPY carried it all the way down to below the 200-day moving average. And we'll look at market breadth indicators for the broader New York Stock Exchange Composite Index, and they're still firmly bearish. I've been talking about this bearish case for a few weeks or a few months now, actually. And there's still indicators are still bearish. We'll look at Apple, and it failed at resistance and it's weighing on QQQ. From all this turmoil, bonds are benefiting and are at least holding support and possibly rebounding. We had a throwback in the United States dollar index, and so far it has reaffirmed its uptrend, and multi 52-week highs may be soon to follow. And this, of course, is weighing on gold and oil, but so far not on natural gas. All right, so this is a chart of S&P 500 ETF SPY. So many weeks ago in August, there was this pretty nasty looking breakdown, and following the breakdown, this red line, the 50-day moving average, crossed below the 200-day moving average. Now we had some back and forth filling and also a pretty significant rally here of the September lows into early November. But so far you can notice that this 50-day moving average is still below this 200-day moving average. So this already sets my bias to bearish bias. Now we had what's called an outside reversal here at the heights, which is basically this big red candlestick almost engulfing this hollow candlestick, and then we had a follow through down, a gap down here, and another gap and run today and Friday. We may be a little bit overextended to the downside in the short term, so possibly we may get a retest of this breakdown around 207. And of course, alternatively, we could just completely collapse and continue down. But in any case, my bias was bearish, and if you watch some of my previous videos, I kept telling about this. Now, this gap right here, some would say, when this gap occurred, some commentators mentioned that this is a breakaway gap and we may continue higher. To me, this looked more like an exhaustion gap following this large move up, and I think this was indeed an exhaustion gap and is certainly filled right now. Anyway, so also on balanced volume, you can see it's been trending lower. So even though we're trying to push to new highs, on balanced volume actually pushed lower, and that means that the volume behind this move was really lacking. We had a MACD crossover in the positive territory below its signal line. So some of the trend following systems use pure MACD crossover, so that's already a signal for those systems. Also, breadth momentum oscillator. Again, if you watch some of the previous videos, I went over this, and right now basically this breadth momentum oscillator is dropping and it's still in positive territory, so it has some room to run to the downside. Let me just update this. Let me see if I got a new value here for no, not yet, but new highs, new lows percent index did hit the plus 5%, but I think following today's sell-off we may actually get a bearish signal here by crossing it below the 5% threshold. All right, this is a chart of New York Stock Exchange Composite Index. This is a very broad index of all the stocks traded on the New York Stock Exchange Composite and New York Stock Exchange. So it's pretty similar pattern to the S&P 500. We had a breakdown here in August, back and forth, and then a rally. Now notice this rally peaked out around the 200-day moving average, and then we had a pretty straight shut down. Again, I think we're a little bit overextended to the downside, but as far as support goes, there's not much of in terms of support. Maybe there is some support here at 98.5 or so from these two lows. But the significant support really is down below here at 9665 in the September and August lows. So we certainly have lots of room to run to the downside. I pointed out the similarities in my last video from the last week from November 6th. Please take a look at it. I went into quite a bit of details about the similarities between the current picture and those from 2011 and especially from 2008. In fact, I think this picture is more similar to the one we had in 2008 versus 2011. In 2011 we had a breakdown, but we held support at the lows and then rallied hard from there. In 2008, as you may know, we did not hold support and we continued lower and the bear market started. Now the reason why I say that this is it looks more like 2008 versus 2011 is because this advanced decline volume lines have been trending lower for quite some time. If you look at the charts in the previous video, you will notice that the trend in lower for those in 2011 was not that long. Anyways, so far the lots of market breadth indicators that I follow, for example, this New York Stock Exchange stocks above the 200-day exponential moving average, the bullish percent index for the NYSE. Notice that they dropped below the 40% marks here in August, and they never recovered above the 60% mark. By the time this rebound took place in 2011, the percentage of bullish percent index already recaptured the 60%. So the picture was quite a bit different back then than it is right now. Also, this breadth momentum oscillator, which is a version of McClellan oscillator, you can see this dropping down, and there's plenty of room for it to run into the negative territory. Notice that what happens when it runs into negative territory, we have more downside pressure. So we're still in positive territory, and there is lots of room for it to run to the downside. So as I said, we might see a rebound to the broken support here in the 10.351 area, but I think we still have lots of room to run to the downside and possibly a beginning of a bear market. And also MACD here, if you're doing a how do you call it, a trend following system, this is a clear signal, one of the clear signals to go short here. All right, that's all I wanted to say about NYSE. All right, I wanted to point out just one. I don't normally trade individual stocks, but Apple caught my attention this week. So we had a significant gap down here. This is about 3% gap down, and basically continuation lower. And today we had another small gap down and a run lower. So this is Apple. This is very big, and they report this. They have really good sales. Their bottom line is enormous. They're doing stock buybacks. So why are they under? Why the stock under such selling pressure? Look at price to earnings ratio. It's still relatively nice. I mean, you can consider this a value stock almost, but this is a technical analysis, and it's really difficult to say the reason for this breakdown. But the fact of the matter is that Apple is being distributed, and you can see there was multiple breakdowns of support breaks here and here, and then there was a bearish engulfing pattern here, and then here now just this week, basically this is a support, failure at resistance. If this is a resistance, then we failed at resistance. So looks like Apple is bearish, really. And we may see a retest of at least these lows at 106, possibly even this August lows as well. So next I wanted to point out QQQ, the Nasdaq 100 ETF. Apple is almost 13% of this ETF. So every time Apple moves, QQQ will certainly feel it. Actually, very similar pattern to the S&P 500. There was a large gap up here, and some people say that this is a breakaway gap, and indeed, actually, it made a 52-week high. And this is on the heels of blockbuster earnings from Netflix and Amazon and Facebook, I believe. So once again, looks like a small percentage of the index was making pulling the its share, but the rest of the index was really not working to make higher highs. You can see this is a very top heavy ETF. 50% of this ETF are in the top 10 components. And you can see that Apple and Microsoft and Amazon and Facebook, that's already quite a bit there, and plus Google. So um, basically, this advance was not broad. And let me see if there is a. You can see actually it's very interesting that the volume was pushing, did not make a higher high, but the advanced decline line did. So there's a divergence right there. Anyway, so that's all I want to say about QQQ and Apple. Anyways, stocks are very highly correlated to one another, stock indices, of course. So I look mostly at the S&P 500 itself, and QQQ is sort of a derivative of that, because I believe 95% of stocks within the QQQ are also within the S&P 500. So it makes sense to me to just look at S&P 500. Next, let's look at bonds. iShares Barclay Aggregate Bond Fund. This is a very broad, diversified bond fund. So last week we had a pretty significant breakdown here in the price of AGG, and we came down all the way to this level of 107.99, 108. And I pointed this out, saying that bonds are really at support, and I thought that we're gonna have a rally, because I think bonds are still bullish. There is a lot of chatter and about a lot of excitement about interest rates going up by 0.25%, but overall, I think bonds are really kind of like a hedge against stock market breakdowns, I guess. And if stocks come under selling pressure, money has to move somewhere, and bonds are certainly one of the more logical places that they move. And looks like so far we're holding this support, and looks like we're actually getting a rally, and we closed this gap down. Today we closed this gap down. So to me, this looks like a bullish chart, especially if the S&P 500 stocks come under more selling pressure. Money will most likely rotate into bonds. All right. Next, let's look at the US dollar index. This is a daily chart. So several weeks ago, we had what I thought was a false breakdown, and the support clearly held here, and we had a pretty powerful rally for a currency. And then here last week we had what I thought was a breakout with a big white candlestick here. It's in the zoomed in part. Then last week and most of this week looks like we had what's called a throwback. So this red candlestick came down to the breakout level and touched it, and then today we had a rally off of it. So far this breakout is holding, and this could be like a fallen flag after a breakout. And if you like chart patterns, a breakout above, I don't know, 99.60 or so here. Yeah, 99.60 would call for a continuation higher and most likely will challenge a 52-week high. This is like a technical classical analysis. Price targets. So, US dollar is certainly still bullish, and we're challenging 52-week highs. So it will most likely help or rather hurt commodities. And let's look at commodities next. All right, this is a gold chart, daily spot price of gold going back 6 months. So here back in October, we had a big white candlestick with a close above this green line, which is a 200-day moving average, and there was quite an excitement about this in the gold bugs circle, with people saying that this is it and we have a breakout and we are going to go higher from here. Now I really questioned this, of course, back then, and I put a question mark here, breakout. There was another questionable breakout here back in June or May rather. Of course, we basically completely failed it, especially right here when the support gave, and we just had non-stop selling since October until now. Now, we are coming upon a support of some sort. This here at 1072.30 is multi-year lows, and they were set here in July of this year. We just touched that low at 1073. Will this support hold? That's the biggest question in the gold, well, the gold box circle, I guess. Now, we are a little bit, well, we are somewhat oversold. So I'm not excluding, at the very least, a rebound to these broken levels, possibly even higher to maybe this level here. But gold still is very much bearish. So I think if this rebound happens, most likely, once again, it will get shorted. See it. So on balance volume, notice that even though there was, I pointed out this divergence several months ago, actually, we had gold making higher lows, higher highs rather, and higher lows, higher highs. But on balance volume, which is an indicator, it's a very nice indicator. Sometimes it shows nice divergences. Was trending lower. It was not making higher highs and higher lows, and I pointed this out, and it looks like this rally really lacked the volume needed for a true breakout. Also, I wanted to point out that members of my trading service received a timely alert about this breakdown here, and are sitting on a nice profits already. So please consider signing up at MasterChartsTrading.com. Next, let's look at gold miners, GDX. All right, next I wanted to point out platinum. Now, I don't normally trade platinum, but it's interesting because this is also a precious metal, and it correlates quite closely to gold. Look, this is a daily chart of platinum. This is a 20-day correlation coefficient. Now, for the most part, it's highly correlated to price of gold, at the very least lately. Notice that platinum actually already made a lower multi-year low here. So I wonder if this divergence is sort of like a leading indicator, and maybe gold is actually going to break the support that I just mentioned and continue lower. Also notice this unbalanced volume is clearly pointing lower. Let me just go back to the chart of gold for 1 second. I wanted to point out that if this level is indeed broken, then we're looking at just from a point of view of classical technical analysis. I'm just gonna turn on this inspect button here, and it's called a measured move. You could measure it from here or possibly even from here, but let's just be conservative and measure it from here. So if this support is broken, looks like we're looking at another $77 drop, another 6.7% drop, and it's indicated here on the left, in the grays on the left there. So if this support is broken, looks like gold may be headed all the way down to about $1,000 an ounce. All right, let's next look at GDX, the gold miners ETF. Okay, so daily chart of gold miners ETF GDX. Similar picture to gold itself. It's quite a bit more volatile than gold itself, of course. So similar picture. We had a breakout and then another breakout that I thought, but anyways, it's a bearish security. But what I wanted to point out is this support level around $13. Looks like we have tested this support on numerous occasions here and held it, and then rallied up here. Now we're back to this $13 area support, and again, I wonder if this support will hold or not. Now, as far as, because market breadth for GDX is actually available, so we could look at it and see where is it leading us. And looks like we already are getting new lows in the advanced decline lines for the GDX. Also, unbalanced volume is broke down here and is leading lower. Now, there is still quite a bit of gold miners bullish percent index. Quite a bit of 34% are still in the buy signal. So not all of them have broken down. Here you can see that we're at zero when we reached the selling climax back in July. But notice that it was about the same level, 30-40. The bullish percent index was about the 30-40 level, and then we had still quite a bit of room to run to the downside. So I wonder if we're getting set up for something similar to what we had here in let me see, where was this, in June, July. Because you can see the bullish percent index is still at about 34, so there's quite a bit of room to run to the downside. As far as just pure momentum, looks like we're not that oversold yet. Looks like here MACD bottomed out at around -1. We're still at about 0.5. So also wanted to point out that the members did receive a alert about this shorting opportunity here. All right, also, okay, another thing is, same thing as with gold. If this support gives, then we're looking at like this much, or maybe even this much, being duplicated on the downside. So we're looking at another about 20% drop. So GDX may hit around $10 if this support gives. All right, let's now look at WTIC, West Texas Intermediate Crude Oil, spot price daily, end of day. Bearish security. The 200-day moving average is above the 50-day moving average. We had a nasty breakdown here, multi-year lows. So then we rebounded here. This could have been a bull flag because we had a nice 3 powerful looking candles and maybe even attempted a breakout. But price was rejected at the 200-day moving average, and we more or less never looked back. I pointed out several times this level at 43.21. Here the price was rejected a couple of weeks ago, and we attempted another rally. It failed again. and we basically broke down this week below this level, 43.21, which opened a flood of orders, of sell orders on Thursday, which continued, and selling continued on Friday. Now again, we're somewhat oversold, so I'm not excluding a rebound to 42.58 area, maybe $43. But generally speaking, I think we will get a retest of these lows here sometime in the near future. Again, members received a alert about this. Looks like on balance volume, and this is sort of a telling sign, looks like on balance volume is already hitting new lows. It looks like it broke down below this low level. So this is certainly not a good sign if you're a oil bull. And we're also not that oversold. There's plenty of room to run to the downside at this MACD. It's entirely possible we may actually break the support and head even lower. If you're listening to various reports, there's basically a glut of oil, and Saudi Arabia, for example, it doesn't want to cut production, and that leads to even more oil and lower prices. So finally, let's look at natural gas, net gas spot price end of day. This is also a bearish security. I was shorting it here. I forget where exactly I went short, but I did go short somewhere around this area, and I rode it pretty much all the way down here until I saw this big white candlestick, and then I think I exited around there. So this is, I think, is a bullish engulfing, or at very least an outside reversal candle, and also a multi-year low. So this is certainly not a bullish sign. But having said that, a reversal at the multi-year lows is, very much possible. So I think we're right now in the middle of a counter trend or a bear market rally. And even though, we could potentially get somewhere maybe into the 50-day moving average here, so at $2.50, possibly even higher to $2.57 here from this resistance of, now becomes resistance level. But if it gets anywhere close to those levels, I will be looking for shorting opportunities, of course, because this is still a bearish security. So, it is more profitable, in my opinion, to look for shorting opportunities in downward trending security than to try to find the bottom, because the bottom is notoriously difficult to find. Maybe the bottom was here, or maybe it was here, or maybe it was here, but it's really difficult to say. Here, this was a pretty big bullish engulfing. I thought, maybe I should just exit. So I did exit. And then, lo and behold, we had a pretty sizable rebound, and I think we're still in the middle of that rebound. On balance volume, by the way, very interesting, it's still trending lower. So I wonder about this rebound and how long it will last. All right, let me quickly tell you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services that are now live, and they're very reasonably priced at $20 per month, and you get all kinds of useful alerts, like I just mentioned, about gold and about S&P 500 and bonds. I trade mostly big markets like S&P 500, oil, gold, and natural gas, and bonds. So I think it's well worth the money, and I'm getting pretty good feedback. People are making quite a bit of money from the alerts I'm sending out. So please consider signing up. Also, we have a blog and video section, and this information will be posted there, of course, on the blog. And also, if you go to Public Charts and Social page, you can sign up for our mailing list, of course. But these charts that you see in this video will be posted here on Public Charts page. If you have Twitter, Facebook, YouTube, or StockTweets accounts, please follow us there as well. That's it for this week's recap. Thanks for watching, and have another great trading week. Bye-bye.